Howdy everybody, Brian here from quantlabs.net. In today's video here today, June 9th, it's 7:13 p.m. I have done a complete analysis on the overall space. In this video I want to do a tutorial, but I'm doing this with a mission. I'm looking for feedback if people are out there liking this sort of content and would not mind paying for a type of analytical service like this to know what to trade into, or I should say invest into, is probably a better word, long term. Based upon, as I said, I have MotiveWave at my disposal, got my own scripting and some other stuff that I've got as well. That's very helpful, including spreadsheets as well. Let me show you some of the stuff that I've got brewing. Okay, so I've got here MotiveWave. This is for Oanda. I know a lot of people go, why are you talking about Oanda that you don't trust them? I don't think I'd be trading. Now, the keyword is always trading versus investing. Trading is day trading, and I'm not comfortable with trading Forex and CFDs on an intraday level. In terms of CFDs and Forex, I think investing might be okay. I'm going to show you some charts here that you could have made money based upon all of these investments, we'll call them. Investments, okay? So just make sure you understand that, the difference. Okay, so what we got here is, again, now this is CFD, but I'll make a separate one for Forex. But CFD I'm more interested in because CFD is like a cheap poor man's way to get into the commodity field without having to do a lot of, through higher priced contracts and whatnot. For small guys like myself, CFDs is not the best. I would not highly recommend putting your life savings into them. But if you got a small account and you want to grow it, this might be a decent way to go if you trust a broker. This is where it comes from. Oanda, I'm not a big fan of them either. But looking at the crypto markets, which I'll also do, it's getting tougher to trade in over the last couple of weeks. And what I try to work on ain't just working out. So I'll talk about that in my outlook on crypto as well. I'll still have 3 videos here. And I'm also going to be putting this stuff in my tutorial section of my Quant Analytics, just as a tutorial what you can expect. So let's get to this. So what you're looking at here, again, MotiveWave, the trading platform. I've got here the different outlook for harmonics on daily data. Okay, that's all I'm doing right now. And that's because it's investment. So we have here a couple of pairs of actually looks like 2 pairs, Forex pairs that are good for investing. Okay, not trading. I wouldn't trade this, day trade any of these, but I'm only interested in the CFDs, which are like commodities or indices or something like that. So we have here corn, and what we look for is this pricing here, and the target's supposed to be moved up here. You can see here. One of the other reasons why I like MotiveWave, I can just zip in and out of charts without having to show you ugly charts. So these are real data. You can see it's on an upswing. It's been on a downswing, but even if this doesn't work out, this might be a really good trade as the growing season has started. This is a seasonal trade, and harvesting takes place. So there might be some momentum leading up till, let's say, between August, September, October, as the harvesting season kicks in. So this might be just a predictable trade. We can probably see that trade somewhat through here. So you can see here from May going all the way from whatever the price is. Oh, here's the price at 340. So $1 all the way up to 450 up until June. So this could be another predictable trade. I don't know. And then here we have September, rise there. But that's a pretty good trade right there for a CFD. So that's something I'm probably interested in. Okay, so let's go back to our list here of harmonic patterns. So here we have Germany, Euro, and China. Now again, these are predictable trades. Let's see here in Europe. I think what's going on here is that we had this massive drop. Just as a note, if you followed my videos from yesterday, I've looked at the CFDs for when the market's tanked. what looked like could be safe haven trades if the markets do tank again, and there's lots of calls for it, is that essentially what could happen is Norway and Mexico might be good, interesting currencies. Anything to do with those countries may be a good place to hide out in. Just something I've identified yesterday. So that's something I'm going to keep top of mind as a defensive play instead of the standard gold and other CFDs or commodities that are supposed to be safe havens that didn't work out. But from what I'm seeing, it looks like Norway and Mexico would be it. Because think about it, Norway's always been a pretty safe country to put money into. Okay, it might not be the best performer in terms of when the up markets are happening, but when you think about the down market, they're pretty conservative, and they got a wealth fund that's pretty well diversified out of oil now, and yeah, so they're doing all right. And Mexico would make sense as well with the U.S.-China tensions, where if there's more trade war tension, I think the big big best beneficiary of that will be obviously Mexico being right next door to the U.S. So that seems to be the case with the currency as well. But so here we have Euro top 50. Here you can see the big drop here starting in March. Obviously bottomed out. It's on its way to some form of recovery. They said the recovery, I'll give it a half W or a V if you want to call it that. But that is on its way, as long as the good news is still rolling around. And then, of course, that's going to include the German top 30 as well. So we've got same trend here, more recovered. So this may be the place to be. And the question is, will it outperform the U.S.? We'll check that out in a minute. Another one that's looking pretty interesting is China. The China top 50, again, it's not fully recovered like Europe or Germany has. So there may be some struggling there. But Europe is looking pretty decent, I gotta say. All right, so a couple of things what we can do here. Let's say if we went with corn, Germany, and Europe in terms of up moves and what the performance will be. This is the interesting part. I'm going to make notes of this. So what we'll do here is we've got the DE50, we've got the EU, no, it's a DE30, whatever, 30, EU50, and corn. Okay. So what we can do here, using my favorite, which is only available in the high-end version of MotiveWave, so it's a pretty pricey option. But I'm going to put these new. So I'll do corn first. USD clean chart. Okay, so I'll close that. Okay, so this is a clean chart. So we're dealing with a daily chart. So 1 day. Okay, so this is our 1 day chart. So one of the things that you have to understand about MotiveWave, it's so powerful. I haven't gone through everything that MotiveWave offers. What we have here is one of my favorite ones, which again is a premium edition of MotiveWave. If I could find it, is the Hearst cycles. Very powerful feature. So I'm going to use these defaults. That's kind of what I use. Actually, there's got to be more than that. So let me just Okay, so we want the Hearst cycles. Obviously, I forgot some stuff here. It's better if I show these to you. It gets kind of ugly. These cycle lines. I'm not going to get into what they are because, to be honest, I'm not. There's a few symbols I could look for, but I want to show you the logic here. So here we are with the cycles here. So what we're looking for are these things right here. Triple diamonds. Okay, so you can see here, the triple diamonds didn't work quite here. Definitely worked here. Okay, and what I'm saying, it look like these are reversal patterns right here, and this looks good. Okay, so you can see here, we've got a new reversal here. So this is definitely an upswing. Now what you want to do is to see what happens to here in this light blue, this guy right here, what's going to happen, which would be July 3rd. Question is, will this come back off and take off, or are we going to continue to have, follow this purple line, this one right here, this guy right here. So that purple line is going to tell you how far along this could go. Okay, so the way it's looking is we've had some weakness here, but here and here are your key dates. So it's July 3rd and the 16th. This is one of the indicators that can be, I've seen that work pretty good. So that's something I'm interested in. Now let me just get rid of this, it's a study here. Yeah, let me just get rid of this. Okay, so now I delete that. There we go. Okay, so the next study I like is Ichi Moku clouds. I know you haven't seen this in a while, so if I go to Ichi Moku Kinkyo Kinko Ohio, not very good at that. And these are pretty good too. So what we can learn from here, there's different ways to measure the markets. You can see here we had an upswing here, downswing, a little bit flat, 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 and then you see this large decline again. So we have this upswing, but it's predicting it could be another downswing. So that depends upon the volume, but it's using this historically as the down pressure in the markets. But I have other tools that will look at this to see what kind of call we can get out of this. So the other one that we want to look at that we've highlighted was the Euro 50. Okay. So Euro 50. So make another chart here. EU 50 right here, daily chart again. This is classically bottomed out for sure. But the question is, what's going to go beyond this? Will it? And I'm not sure why Europe is chosen over the American indices, but I find it quite interesting how basically the Europe may start to outperform the US. So you can see here, this only goes as far as here's next key date, August. See a drop here a little bit. The question is, will it peak right here? You can see here it's already peaked, but it's still trending up each day. But again, we have other tools to look at that. All right, so let me pull up the other one, the Ichimoku. And there's so many here that I could look at. Just some of the favorite ones that I like. So oddly enough, we've got a buy signal right here. Let me just get rid of this other one, this first thing. Let's see, we have a buy signal, buy signal, buy signal. So that buy signal has been pretty good. What I find interesting here is we have a sell signal, and look what happens. So you get a whole mixed bag of what to do here with these signals. So here would have been a great time to get into. Obviously right here is better. Here and here would have been good. But the question is, will it continue to move up? That's what we're going to look at the other charts. Look at one more. The DE30, Germany. And do the same thing here. So let's look at the Hearst. So what's it's telling us? A triple diamond here, we got one here, we got one here. So the next leg up will be right here, August. So if that continues, then we're doing pretty good. That's all I use these Hurst cycles for, is to get rough dates on when the next cycle will be for this so-called triple diamond, I guess. That's all I use them for, because that I'm not seeing any tool out there that does that, or anything that really does that. So let's go back to the Ichi Moku. From a programming point of view, I just want to tell people that's a pretty tough thing to program. So this is worth a ticket of admission using these with MotiveWave. So here we have a buy signal similar to Europe. So Europe and Germany are pretty well very similar. So it looks good. I'd say the next leg up would be August. So that's, let's say, the top three of MotiveWave. So if you're not familiar with my stuff, what we have here is I've got, actually, let me show you first. This is a ranking spreadsheet that one of my scripts are able to generate. I've got so much stuff, I got to pull it all out of a box. A couple of things I want to show you here is we have the ability to track by momentum, slope, and standard deviation, which is volatility. Those are the really useful ones out of this. So here we have sorted in reverse the standard by standard deviation sorry, this one, standard deviation. So these are the least volatile from the bottom. So you see here natural gas. Oh, is that right? No, I'm sorry, from the top. So treasuries are least volatile, which kind of makes sense. Gold, and then the gold-silver ratio, but they're not top performers. Here we know that obviously Brent and crude oil are fairly volatile. This one I wanted to talk about. Back in January, this was a big mover, sugar. So I just want to show you something here. Looking at a chart here. This was a huge, it was like non-stop up. So just look at this trend here. So we're back in September. So let's see what the price is. So it's at roughly 10 cents. And it's moved up about 50% over 3-4 months. That's a big move, even though it's a small. But this was a consistent move up, and I was really liking this trend. Comes back down, and here we are again at this trend where it's going to start to move up again. So I don't know what sugar will be, but these trends are really impressive. It seems to be fairly predictable. Some are sudden move up. So this is something I would watch, but it's not coming up in my reports at all. Just want to highlight that. Okay, so going back to the spreadsheet here, we've got everything by volatility. And this is over the last 6 months what I'm about to show you. As I said, I can sort by momentum and slope, so we'll do both. So we're going to choose momentum here to largest to smallest, and see what were the movers. Okay, so we've talked about these guys before. NASDAQ and the US indices are the best movers. Japan makes sense. Germany's still in there. India's in there. We'll talk about that in a minute. The Russell, France, and then WTI. After that, I really don't care. But let's then go into what the other big movers are. The question is, will the US indices start to slow down, and this one specifically, and potentially Europe, may start to outpace the US market indices? That's the question. So if you go in and sort by, this time we are going to sort by slope. See what comes up here, if it's similar. So here we're doing it in reverse, looks like. Yeah, so all these we're not going to ignore. I mean, these are, again, these are shorting opportunities, okay? So once you get comfortable with the longing, that might be the better place to be in. But here is your performance, okay? The last 6 months. So we have the US 30. So now we're starting to see more Asia, Hong Kong, Japan, India, NASDAQ, China, and then Germany, and then the UK. So these indices are starting to move, but there's certain ones that are outperforming based on slope. So we got Hong Kong here, India, Japan, China, and Germany. So how can we filter those out to ensure that they look good? So what I'm going to do is I'm going to go back into my Word documents here, and these are other reports I have. So a couple things we can look at here to see what's going on. So this is how we can do it. And I've shown these potentially before, you may or may not have seen it, but this is part of my tutorial, so I'm going in a greater length to describe this. So these reports, so we have right now 4 CFD reports we can look at. One on shorting opportunities, which doesn't really have anything, it's blank, so there's no shorting opportunities as it stands. But the other ones we have are filtered based on length, just long regardless of, there's no filter, let's leave it that way. And there's one other one filtered on volume. So we'll do the one filtered on volume. So these are that are more than 100,000, on a WAMI. So this can be an interesting set of instruments to watch out for as momentum builds. Momentum builds, or there's a pile-in by volume. These two might be ones to watch, okay? So if the volume specifically, let's see if we get the volume right here. Just blow these up. They're not pretty charts. We can see here we've got two things going on. We've got the momentum's building, RSI's starting to build up. You can see these bars here move up. That's a WTI. So there's a couple of things we can look at. You see it's kind of upward trending. Signals, these are kind of meaningless if you ask me. But these are the things that you want to be on the lookout for. Here's our trend line, standard trend line, hits the trend and then drops off. What we need to see to really, as a classic entry, is to see this price cross above the historical trend of 6 months. So once you see the price approach the trend, that is a really good entry. So we're pretty far off it. Here's another way of looking at it. Here's our Fibonacci levels. We have a 618, which is considered a classic entry. So right here is our entry point at 618, but usually, and this can be difficult to trade, especially in crypto, but this follows the classic trend that we want to see in the world of Fibonacci. So you can see here, hits that 618 level. So we got 1, 2, 3, 4 tests. So we got 1, 2, 3, 4 tests, and then it pushes up. Usually, this can be controlled by whale traders. What they do is they'll try to fake out a lot of the weak players that are following this price trend. We got 1, so they'll push it up a little bit, and then they have enough control and impact to bring it back down, and so on and so forth along this 618 level. And on the fourth touch, it starts to take off. And that's from 45 to 70. But on the other hand, that can be controlled kind of by news as well, like the so-called wars between Saudi Arabia and Russia. So there's some fundamental as well going on. Here's another one that we can use to confirm things. These are daily returns on a particular instrument over the last 6 months. So you can clearly see, is it or is it not more positive returns than negative returns based upon this zero line right here. This is a normal distribution. These are your fat tails right here. And it seems to skew, well, tough to say, but it's a 50-50 bet. And this is where you got to really use the fundamentals to really determine price. But as I said, you can use the trend once across that trend as an entry. But here it breaks down right here. So that's something to be on notice for. But here is the overall price chart with both RSI and momentum. And one thing I like to watch for, we have our undervalued, breaks that 50 line, and then it moves up. And usually when that sort of happens, you can see here, it broke it here, January broke through, and then got through 70. So right about here as another potential entry, but like similar to the world of Fibonacci, you can use the 50 line here as an entry point. You can see it right here. You would have missed out here, but on the other hand, you could have taken the price here, but then you would have been potentially, bottoming out along through here, hoping that it will go through 50 and then 70. But I like to take orders at 50 because there's usually enough volume to push it and break it through. But usually that's not enough. I like to see entries at usually around 55. Once it hits around 55, chances are it will move up to 70. So here we bounce around, but around the price of $50. And it did move up to 65. So that's a pretty nice return. But that's again, I'm always saying this, investing from February till about May to get that trade. And you can clearly see that's what happened here. So now, again, we are just on the verge of breaking through that 50. We got some nice green bars here. And the way to confirm that is really your momentum to hopefully build on to that trade. And that's why, as a long, this is, outside of news, could be a good trade. But the real classic is you want to see it break through on that trend line. So a couple of ways to break it down. Now remember, this is a 100 or 90-day view. We have here a 180-day view. So the 3-month or 90-day gives you an idea of how things look, and it's looking good. But you always want to try to get in here. But I've seen it enough where you can get faked out a lot, and you have to kind of wait it out until it hits that 50 level to sort of say, yes, this is an opportunity to kind of pile in and put on some small positions and add more as that price does go up. Here on the 30-day view, it's better. But here you can see it's at that 50 and it flattens out. So I think a lot of people are doing the same thing where they're just waiting out each day, and then now they know it's sustainable. So they'll start piling in probably tomorrow and start seeing that price go up. So just I can kind of confirm that also by creating more charts with MotiveWave. So this is what I like about MotiveWave, especially with the Hertz cycle. So if I go WTI, so we do that here, WTI. Should be able to see that WTI code. WTI code. There we go. Okay, so again, we're just sticking with the daily view. Okay, so you can see what I'm saying here. Okay, but if I was to apply the HERS, what will it tell us? And what we're looking for, here it is. See what I mean? This thing is so powerful. HERS is a great classic reversal signal. So we know right here it's working, okay? And we know that that price probably will peak here. But look at what's happening. So it might flatten out, and our next big move up will be around end of June, June 30th, 29th, 26th. It's that accurate. And if it continues, here's our next one will be September, based upon these light blue lines. You see here, this didn't work out as well. But again, part of the problem is it may have thought fundamental or technical news, and then based on that, that's where things would work purely just on technicals. But then we know somewhere in around here is that news between the fighting price war between Saudi Arabia, which drove down the price. So that didn't help anybody. So I don't think these HERS cycles would have worked minus that. So you have to be on top of that. So here, not so much. Here, again, it broke down. But it looks like it does sense that, well, I don't know if you want to call it a reversal. But yeah, it's a reversal. Another reversal here, the HERS cycle. And here, what you really want is these 4 diamonds. And look right here, boom. So when's the next one on those 4? With that yellow dot here. So when's that? Boom. But bad news comes into the market. And then not quite. Boom. And look what happens. In between here, April 20th, May 4th, and then price takes off. So the next one, based on that, will be in September. So there might be a cycle here, and then next big massive entry would be here, September 7th or August 21st, based upon the historical performance of these things. Outside of news, really important to understand that. Okay, the Ichi Moku is not as accurate, but from what I've seen, I think this is why MotiveWave does put the HERS cycles as a premium study, which means it's the most expensive edition you need for the HERS cycles. But of course, I got it. When I'm saying pricey, we're looking at, I think it's 3,000, 2,500 US. I can't remember. Okay, so it's not a cheap option, but it seems to work a lot of the times. All right, so moving on from there, let's continue along other little reports. So there's that one. Now let's get into India. We've already talked about India in the past. I can always compare its volatility against overall the utility of, or the volatility of everything else. That is an important factor, obviously. So if I do a sort here on the volatility of India, slope, standard deviation, smallest to largest. Let's see where India stands in terms of volatility. Yeah, it looks like it's one of the more volatile ones. So you have to be a little careful there. Where's India? But this is an interesting one to watch because it did come up in another report. So let me just check that as well in terms of the HERS cycles and see what happens here. So we want India 50. India 50. Okay. So again, let's just apply the Hurst cycles. Now, I've seen a lot in a lot of different algorithms and stuff, but to be honest, this one seems to work really well. This one doesn't do anything. This one doesn't do anything, but that's working. Fancy that. This one, not so much. This one for sure. It's got its 4 plus this yellow dot. So I mean that's a pretty strong indicator. Okay, let me just see. See if I can edit this. Yeah, so what we want to see are the cycles now. But you gotta love this. I mean, I don't have to blow my brains out in terms of development to get something similar to what other people come up with. So here, on July 7th or 9th, looks like we can expect some kind of big next move up, another reversal, and another one come October. So I don't know. I like the oil trade better. That's long-term investing. Okay, so let's go to the other reports we got here. Okay, so what we have here is now this is the one I just closed off. It looks like I just indirectly closed one off. Yeah. So we have, I want to close this one. Okay, so we want, okay, let's do the one based on trend. So again, let's see what this says. So these are the ones based on trend line slope. First one we have is the Euro 50. I think that's pretty convincing to me. And it's in order of the slope on the projection. So yeah, you can see here, it's still above, but it did peak here, 4,000. But it's really dependent upon the states. Again, this looks like it has skewed more negative. I don't know. Euro 50 here, you can see that nice trend from January till mid-April, sometime in April, and it came off. A little bit. Again, you got some momentum there. Actually, it's pretty good momentum, but it's dropping off. So it might have already peaked. Again, I can verify that by looking at it again. So I'm going to get rid of these. I just gotta say, I just really like the Hurst cycles. Yeah, I don't know. I may see we've had instances like this that are coming back down, but it's definitely not buying a classic bottom. Let's see what it says. I'm going to look for that little yellow dot at the top there. 4 diamonds plus. The strength is just not there, it looks like, from a historical point of view. But it's just not that convincing. So let's look at some other ones. It is some form of guesswork, but look, it does hit these flat moves big, and then moves back down. Tough call. So let's see the U.S. bond. How's our trend been lately? That's a classic one. This would be considered a good entry. But even if you do get an entry, you don't move that much up historically. Okay, so let's look at the USB 30-year. So it's moved up, same thing, but it's on a decline as well. Don't know. Just don't know. Here it's clearly more negative returns, but you got a nice trend if you're willing to hang on to it from November till June. Could be a good long-term trade, but let's just here. I want to show some just to compare. Okay, it looks good, but there's better. I think so. So let's say we look at that USB. I'm sorry. What are we looking at here? USB. Okay, so we want USB 30. USB 30. Okay. It's a one-day chart. Okay, so you can see here a nice trend from January. So that is, I got a bunch of windows covering up my price. Huh. Thanks for watching as well, if anybody's out there. Let's see, I know it's gonna like. Anyways, so we're at 157, goes all the way up to, so what are we looking at? 179. That's a pretty good run up. Again, invested. So that's over 3 months. And it bounces around from there. So that's a pretty good run up. And you see, here's the thing. Now, that is 157 all the way up to 186. That's a really good run. But the funny thing is, that's during the peak. But on the other hand, when you look at this solid line up, run up, that's when the market started to tank, right? So as a defense trade, that's pretty good. But let's look at one that I would have thought would have done better. Norway, Norway, and okay. So here we have a similar, very similar trade. 881. No, I'm sorry. So that's from 886. And I mean, they're just huge. 11. So that's from $8 to 11.26. Which one has better performance, the USB 30 or the USD Norwegian? Another one, and this is probably the best one, is the USD against Mexico. Now, this is all, of course, Forex. There we go. So here in January, February, a very good trade here. 5. So let's say we go from so we're going up from 1950 all the way up to 2450. So that's a pretty 25% return. Maybe Norway was not a great trade from, so we got here again, let's say $9 roughly, $9.30, all the way up to $11.30. So that's roughly 20% return. Minus, let's see what the USB gives us. So let's say around here, so the price there is a 162 close, yeah, 162, 163, all the way up to 179. So I don't think the performance is as strong as these two other ones. Okay, so these are your safe haven trades, not so much the treasury. That's what I've noticed. So my point here is you may get better performance out of the Forex or the currencies. Now I do know if you do want to trade that, and the markets do tank, you would want to place, namely, a contract for the micro of USD against the Mexican peso as a contract in the futures market. You can do that if you can afford it. So, and this is the best one. You see how negative that is. It is doing well, but more negative obviously here. But it's been a nice steady trend up. But again, it's all about performance and how you want to allocate your cash. I'm not going to look at this anymore. I think we know when things go wrong, we know where to put our cash as a safe haven trade. All right, so that is based on trend, and I do remember we did lose a file here. So let me just make sure we get that one up. And that should be trend and then volume. And last report here for longs. Okay, so now we go back to the WTI we've looked at. What else do we have in here? So when you see two instruments in two different reports, it's and India as well as in there. Is this yeah? So we already saw this report. My apologies. Yeah, there's one on longs. So let me just pull that one up. This is again is on filtered. Okay, so here again, we've already looked at the CFD for WTI. So that's looking okay as long as the news, there's no crazy news, which there could be, but you have to watch the news and anything on the calendar and what's going on. So oil may be an okay trade. Okay, so that's the way it's looking right now. We've already identified our safe havens, but for a long-term long, I would put a lot into it, but definitely WTI oil looks good. We'll leave it at that. Thanks for watching. I'll put this in the tutorials. This is a typical data analysis that I do using this kind of material. Plus MotiveWave on its own has so much. You can see here we have over a couple hundred studies to go through. I've gone through a lot of them, and then we have the strategies as well if we want to fully automate this. So we'll leave it at that, and this is for the CFDs and for futures, commodities, potentially options outside of equity, and CFDs, which is another way, the poor man's way. And again, if you are interested, just check out the tutorial page for more info on how this analytics service works. Thanks for watching.